Thank you very much, and thank you for the great welcome onto the stage. Ladies and gentlemen, we are going to quickly dive in as time is pretty short and the panelists have got a lot to say. So just before we kick off, just wanted to allow the panelists to give a quick, brief introduction. Lior, shall we kick off with you, sir?
Yeah, sure. So hi, everyone. It's a pleasure being here. My name is Lior Lamesh. I'm co-founder and CEO at GK8. My background is cybersecurity at the level of national security. I used to work for the Prime Minister's office. I was part of a team that protected the strategic assets of the country from cybersecurity attacks. At GK8, we started our journey over 6 years ago when we hacked one of the most popular cold wallets in the market within a few days. We realized that none of the existing cold wallets are really cold. So we come with a new security category for private keys management called Impenetrable custody. We pair it with MPC for automated transactions. We are partnering with both crypto-native companies and traditional financial institutions, providing them with our self-custody technology to offer custody, staking, tokenization, and DeFi services. Starting last year, we partnered with the Galaxy Digital, which acquired the company, but we remain fully independent company. And it's a pleasure being here.
Thank you. Steen.
Yeah, thank you for having me. Steen van der Straten. I'm leading crypto finance. We are part of the Deutsche Börse Group and offer crypto services for financial institutions, so pure B2B play. We enable them on the custody side, on the trading side, but also staking. We do that through our Swiss franchise, but also out of Frankfurt, fully regulated by FINMA and BaFin.
Miko.
Hello, very glad to be here. I'm managing the DLT and Digital Asset Competence Center for Banca Sella. The Sella Group itself is 140 years old private-owned banking group in Italy, covers large spectrum of activities across retail banking, digital payments, and many more. And as Competence Center, we are defining the strategy towards digital asset for the years ahead.
Great. And Pepe.
Hello, everyone. I'm Pepe Fernandez. Everybody knows me as Pepe. I'm the Global Head of Innovation of Prosegur and also Chairman of Prosegur Crypto. For those that don't know, Prosegur is a very huge company with 160,000 employees all over the world, more than 28 countries of operation, and 5 vertical security, physical security, cash in transit, alarms, residential alarms, and either cyber security. But inside the cash in transit, we have several different business, more leveraged on digital, and Prosegur Crypto is one of them. In Prosegur Crypto, we offer a fully set of tools for financial institutions for having not only the custody, but only the access to the financial markets in crypto.
Okay, so that's a really interesting panel members here, ladies and gentlemen. So let's dive in then. So Miko, can we first start with you? Why would a traditional 180-year-old private Italian bank be interested in digital assets custody?
So first of all, to give you a bit more of a context, Banca Sella is the largest private-owned bank in Italy. And although being like the 10th or 11th bank for size, it has always been very innovative at the forefront of some of the most important innovation in financial ecosystem. Just to name a few, one of the first ATM machine in Italy, one of the first open banking platform in Italy, one of the leaders in digital payments, and so on. The approach has always been the same, understanding technology to unlock the potential and better serve the clients. We are doing the same with DLT. We believe that a part of the future of financial intermediation will be on-chain, and we want to be ready when this happens.
And from that perspective, what future value does Banca Sella see in this? Where do you see some of that future value coming from for your customers?
It is, first of all, a very interesting time since we have a new regulatory landscape. So first of all, we believe there's a huge potential in early commerce that find a graceful way with dealing with this new technology. And plus, we have a raising demand coming from customers. That's the basically answer for each bank. So we identify a target of customer that has been exposed in digital asset in the early days. And they are now raising demands for new services. They want to basically have the same relationship, the same level of trust, the same secure they have for classic traditional banking products and services, also for custody. And we believe a lot of players will step in the medium term. So obviously we have a competitive advantage in being one of the first Italian players to enter the market.
Brilliant. And with that, actually, I think that's a good segue into Stain. Stain, your organization has a foot in both camps, the TradFi camp and the digital camp. How do you bridge this? How do you bridge the two worlds, and what do you think is important there?
Yeah, I'm in the market since 6 years now, and if I look back, and let's call it the early days when the first financial institutions started with their crypto projects, I saw a lot of projects fail, right? Banks, and you might be an exception, and there are exceptional banks that are very innovative, but usually the larger banks are not very innovative, and I mean, they're highly regulated, they don't move quick. So it's very hard to implement that, and we've seen a lot of projects fail. The degree of automation, everybody wanted to have 100%, not looking at it very flexibly. So a lot of projects failed, and some banks that were in the space in the early days still don't have an offering. Others do. And I think here we come into play, and with Deutsche Börse Group, with a lot of sister companies within Deutsche Börse Group, right? Like 360T that we have, with Clearstream that we have, one of the largest CSD in Europe. We can put crypto on to the traditional rails. So why does every bank need to have their own big crypto team that looks into how we're going to do custody, look into HSMs from a hardware perspective, etc., etc.? A bank should focus on the core competencies, right? And outsource what's not their core competency. And we go exactly that route. We offer different angles. We offer software and hardware for banks that say, no, we want to do our own custody. Just sell us the shovel. But we also do sub-custody, and next year we will look into how we can bring that to life with Clearstream via the traditional rails, right? Including Swift settlement. And so that what the banks actually know out of TradFi, to really make it simple. At the end of the day, crypto is an asset class. So, and a lot of institutions struggle from a risk perspective, from a compliance perspective, from a perception, but it's risky. What's that going to do with my operational risk? How do we mitigate those operational risks? Is it insured? If Deutsche Börse Group, one of the largest market infrastructure providers, offers a solution, I think that should be good enough.
So that's really interesting, right? In terms of talking about how financial institutions can white label, can leverage on what's already out there to move forward. But I'm sure as well that there are some real challenges where some firms might want to do it themselves, but there are then challenges that digital assets brings which are new to what they might be used to. For example, things like private keys and things like that. And Lior, I thought we could move on to you now, and maybe we could talk a little bit about how you would manage the risks and how what does GK8 do to manage that risk around those type of new risks that emerge?
Right. So first, I have to a little bit disagree because, and it's related to the question. I think that in light of the 2022 events where a lot of crypto companies were a bit reckless and a lot of people paid the price, financial institutions should control their own destiny and moving out their assets from sub-custodians to manage their own assets, right? So I think it makes sense for banks to control their own destiny, to control their own assets. I think that if they built it properly with the needed infrastructure that can meet both the risk management that's also derived by private keys that can be managed properly, as well as all of the internal procedures to meet different compliance and regulation requirements, you can build something that will exist with you for the long term. So, as the technology providers, and our goal eventually is to establish trust. We believe that trust is the one thing that any of either crypto native or traditional financial institutions need to have in place in order to succeed. Think about it. What we need to do is be able to build a market where our parents or people that are not, know how to speak the Bitcoin language can work with crypto. And it's not actually the case right now, right? We see a lot of hacking events that taking place on a monthly basis with all of the different technology out there. Just in the last month, we've seen Wazirix, which is one of the largest Indian exchanges, they were hacked for over $300 million while they used a multi-sig solution. We've seen DMM, which is a large Japanese exchange. They were hacked for over $300 million, and they used cold wallets. A few years ago, we've seen also Liquid in Japan. They were hacked for over $90 million when they used MPC technology. So there clearly is a problem with the level of trust that institutions are offering right now.
And I guess that's going to become even more of an issue if we start to tokenize and move digital assets on as well, because they're going to be on the same rails as what we have now. But what are your suggestions then, Lior, about how we build that trust?
Yeah, that's right. We're going to see more and more tokenization projects as the regulation is more easy right now with real-world assets that are tokenized over blockchain rather than crypto, and the infrastructure that needed to work with tokenized assets is just the same as with crypto. So I completely agree with that. And to your question, in order to establish this trust, we offer impenetrable technology, right? I want to explain what I mean by that. In order to do so, I want to explain the philosophy of how hackers think. Okay, hacking is a business, right? How much hacker will invest to compromise into an exchange or into a bank? It really depends how much he can get. It's about ROI, and hackers will invest millions to steal billions. And today, there are a few security categories. There are these hot wallets, which are constantly connected to the internet. And based on our experience, you need around $1 million of investment to compromise one public internet-connected computer. Then you have the more advanced solution, like multi-signature or MPC, which means that instead of one private key, you have 2 or 3. So hackers need to invest a few millions of dollars, but still the ROI will be positive. And then you have the cold wallets, and the problem is the existing cold wallets are not really cold. They are all at some point connected to the internet. Either if it's with thumb drive, if it's with QR code and camera, there is input from the internet, and that's exactly the problem. And we come up with a new approach, which is called Impenetrable Vault. We never receive input from the internet. We have cryptography patent that allowing us to make the whole process of creating, signing, and sending transactions without ever receiving input from the internet, so you're not exposed to any cybersecurity attack vectors. Now, MPC is great, but it's great for assets movement, for the day-to-day transactions, but not for the long-term custody. And the right risk-based approach is to manage the risk in a way that the majority of the assets should be managed and protected in the impenetrable custody, while a smaller percentage in the MPC, and then you can enjoy both security and the usability that you need according to your business case.
Now, that points that actually, to me, the key point there is a lot of the risk management changes in the new world that we're in. Some of it changes, some of it is the same. Pepe, I just wanted to go over to you to get, given your background of your company as well, it's all about security, physical security, now moving into digital security. What's your take on this? Is this all new?
Yeah, let me start with a story, right? Some time ago, I was talking to a DLT responsible for a big bank, European bank. I know him very well. He told me, Pepe, we are thinking that we have enough skills to store the private key by ourselves. And I say to him, man, this is not the key point. This is not about private keys. This is not about multi-party computation. This is not about multi-signature. No, it's who is taking the risk. Who is taking the risk? You. If you have a custody solution, you are taking the risk. If your balance is zero tomorrow, the worst day of your life starts tomorrow. This is the point. We manage more than $500 billion every year of risk with a full insurance coverage. And we have a full insurance coverage for our crypto in our bankers. That's the key. For me, I've been working for banks for 25 years, and some people of the team too. For something to happen in a bank, three things. First, regulation. If it's not regulation, the bank is not gonna come. Second, risk management. Risk management. Who is taking the risk? This product is new. I don't want to take the risk. This should be in the head of the people of the banks. And number three, and this is important, trust. Who do you trust in? I mean, I'm talking about not in technology. You don't trust in technology. Technology is very important, but it's like courage in the war. You should have. No, it's trust between people. If you take my money every day or you have my assets every day, I trust you. I trust you. I know how you work, and we have been working in the good times and in the bad times. And this is what is important for financial entities. These 3 times are quite important.
I couldn't agree more with Pepe, which is a respectful colleague of ours. The trust should be based not only on the proper technology, but on the way that you operate and to operate with the right people. Prosegur built something amazing with the crypto bunker, and we are proud to be partners with our cyber technology and their physical and human being level of trust, which I really think brings something very strong to the market.
Cool.
If I may jump on this,
please.
I strongly agree to your point, but the trust the banks are leveraging on now didn't happen in one day. And so you should also give the organization the time to rebuild their trust on new capabilities and new technologies. And this is exactly what is happening with banks stepping in right now. Obviously, you take your risk, but you are also dealing with internal culture, reskilling, upskill, talent attraction. And this is something that takes time, requires time. And this is what is happening right now, I believe.
But, I mean, if it sounds a little bit like 2015, right? And don't get me wrong. I mean, at the time it was like, okay, we don't need banks. Bitcoin is the new bank, be your own bank, right? Today, most retail investors buy Bitcoin and don't hold it in a private wallet. They have it somewhere, Bitpanda, with banks that offer it, etc., and the like. So that's over. Now everybody's trying to convince the bank, you need to be the technology owner, you have to have everything under control. But also here, you can pool that to very specific service providers that have the credibility, that have the trust, and that have, over the past 100 years, proven that they know how market infrastructure works, right? So why, as an organization, if I don't have a USP, there are some, right? There are some that have a USP, that have a very unique offering in the crypto space, that are very innovative. But if you're just going to offer Bitcoin and Ethereum to your clients, I mean, don't go through the hassle by setting up everything yourself. It's way too expensive. You can have it much cheaper without much less risk. That wasn't possible 5 years ago, but I think today we see the fully regulated providers in the market, and that's the easy way.
Yeah, I agree that it's easier to start with working with third party to do it for you. But basically, when you work with third party, there are third-party risks that associated with providing services to your client by relying on someone else. Even the way that you want to require withdrawal requests from the custody, there are a large risks that are added on top of what you do if you control your own assets. And on top of that, as we all know, the blockchain market is moving very fast. There are all the time new trends. And banks, although they will start with the most basic services, such as custody, but, or tokenization at this point, but as the market continues to grow, they should be able to offer additional services and adapt to new services right away. And if they own their own infrastructure and control their own private keys and manage their assets by themselves, they can more quickly build new business logic on the infrastructure that they already own by licensed technology, rather relying on third parties that might not offer the services that they're looking to offer. So there are advantages and disadvantages. Yeah.
And I think actually just stepping back, and one of the things I quite like to do is to compare what happened in the TradFi world versus what is now happening in the world that we are in. And I know the FT did some funny articles on this, but we shouldn't reinvent the wheel either. If things are already working, let's improve it and let's make it better, right? And if we look across in that world as well, we have, as you all have said, panel members, there are certain institutions that are generalists that provide this service at a general level. There's some institutions that are very specific, where you have a specific risk, where you have a specific type of financial product or asset or something. If you want to keep your art safe, you wouldn't keep that in the same people that are keeping your car safe, for example, right? So, I think what we are coalescing around, or what we're coming around, is there are different options there, and that you need to be aware of the risks, the different type of risks that arise from these different type of assets, to then make sure that you are custodying it in the right way that actually works for the client, understanding the risk and then moving forward with that sort of view. I think that I'm seeing nods on the stage, which I'm glad about. But given that view, and I think we are also, all of you are in different places in that custody value chain. You still, as organizations, have to provide a service, and somebody needs to recognize that the service has a value and it's worth paying for. I think to the point that we've all raised, there have been some blow-ups recently. We all know about them. I think that has reminded people about a counterparty risk. I think that has reminded people about you get what you pay for. It's also reminded people that if you get something for free, maybe you are the product, and all of that sort of good things that actually remind people about what's going on. With that in mind, what would you advise? What are the takeaways you would advise our audience here if they are looking at digital assets and risks? What are the considerations you want them to walk away with? Can we start with you at the end, Pepe? What would you suggest?
Yeah, sure. First of all, I would like to dip a little bit why the financial institutions should come into this. This is very important. This 10% of the population that wants to have crypto, we are already on Bitpanda, on Kraken. We are talking to the other 90%, to the other 90%, who is the owner of the confidence of the retail financial customer. Financial institutions mean banks. If the banks are coming to the crypto world, this is going to change for all. For all. Data. BBVA has only in Spain 14 million customers, active customers. What if we offer them something crypto starting January the 1st, let's say? This is a game changer. To your question, when I was very young, in BBVA, no, sorry, in other bank, they call OOB products. OOB products. What are O? Can I ask what are OOB? Out of balance. Out of balance. And why are they out of balance? Because we only distribute them. We send a broker to buy the asset, and then other people custody the product. So this is really already invented a long time ago. This is different product, but a small or medium-sized bank has no asset to the Nasdaq, at least in Spain, uses a broker, and this broker has a custodian. This is already invented. That's why my speaking to the banks is nothing different in the concept. It's different in the technology, it's different in the security measures, it's different in some things, but this is something that you already did. I want the crypto to be an out-of-balance product in the bank, and they start being a distribution channel. Just that.
And Miko, what is it you would say to your board?
A few advice, giving our perspective. The first of all is build cross-functional teams. So having tech people, business people, and people for control function on board since day one in order to really grasp the opportunity, but also understand how to mitigate risks. The second one is bring new talent in and maybe open the organization to a change, welcoming also people coming from the crypto world. Why not? The third is perform deep analysis and carefully select the best player in the market. For example, dealing with custody is not a long run. You need a technology provider, market info provider, forensic tools, and so on and so forth. And you need to carefully select. And then you need to understand how to evolve the value-added services together with your organization. We don't go for a crazy run. We go maybe a little slower, but keeping the level of attention very high and protecting the client.
Yeah, protecting the client, I think, is a critical phrase that I'm hearing from this group, right? You know, it is all about trust. It's all about reputation. It's all about risk management. It's all about protecting that client, because we are going to have to win their trust before they give us custody of these digital assets in the future world, right? And staying, you know, your organization is in the middle of quite a lot of this as well in the TradFi world. You know, what do you guys, you know, when your board, for example, talks to you, what are the different angles that they come to you with where they might be a bit different from the TradFi side, sir?
Yeah, I mean, we also offer technology, right? And I think it's twofold. That if we do offer technology, then I absolutely agree our client, the bank, should be on top of crypto. They should have a team, people who understand the risks, but it should also be implemented fully into the risk framework of the financial organization, which they have to do anyways. No board is going to sign off on it otherwise. And then on the other side, we have the sub-custodian solution where we say, look, don't worry about anything, we'll do it for you. And here, of course, it's about due diligence. But again, I mean, all banks have sub-custodians. That's nothing new. There is an onboarding process for a sub-custodian. There are about 625 questions to a new sub-custodian. You need to fulfill this, that. You have to SOC 1 report, SOC 2 reports. You have to have the capital, the insurance, blah, blah, blah. And if you tick all the boxes, we're good to go, right? And I mean, the APIs today are standardized. The booking is standardized. Then you have to think about how do I front that to my end client, valid questions, but here usually that's the easy part. You build a fancy app, you integrate it into front-end systems, so not much risks involved here. But overall, it is managing risks, yes, because they're fundamentally different than the traditional risks that we know. And I'm not talking about the market risk. The counterparty risk is the same concept. It's really the additional technology risk that I have, which traditional assets don't have, right? I mean, my share is at the CSD. If everything goes down, it's in my name somewhere, right? So I can get it. If my private key is compromised, it's gone, right?
I think that's a really important point, right? I mean, you know, we, for example, even as a firm, are now offering SOC 1, SOC 2 services, but a lot of the more crypto-native firms hadn't realized that's what they needed to do, to be honest, to play in this space. but that is actually, part of what firms, financial institutions are much more looking for, to be honest, to be able to provide, right? And how do you provide that trust? But Leo, one of the things that you said, I want to just sort of come back to, you talked about MPC, you talked about some of the different ways, you talked about the risk there. What other criteria do you think people should look at when they're choosing their tech provider then, sir?
Yeah, so eventually when an institution needs to choose the right custody technology provider, there are a lot of aspects that they should keep in mind. Eventually, in continue to what our colleagues just said, the point is that the institution shouldn't be in a point where they develop technology that they are not familiar with, where there are associated risks, right? If they're the infrastructure that built off the layer of the private keys management, the layer of the wallets management, the layer of the internal procedures management, like the policy engine, it makes them be in a position where they can continue to manage their fiat assets the same way to manage digital assets. And that's exactly, as Pepe mentioned before, a very crucial thing. And that's a very meaningful thing. Second, these institutions, since it's a new technology for them, they need to work with a team of experts that already in action, working with organizations for years, right? So, for example, we're in the market since 2018. We've been working with a large number of organizations that already managed more than $10 billion with our solution. So they need to work with a team of experts that will support them in building the business case, building the internal procedures to make sure that on top of the technology to manage the private keys, there are also the procedures to control it properly according to the internal organization procedures. In addition to all of that, there is a peace of mind aspect that could be obtained either by partnership with the insurance. For example, we partnered with Aon and USI, so any of our clients can have access to up to $1 billion of insurance on assets on the Impenetrable vault and up to 125 million on assets on the MPC. And also, as us being part of a publicly traded company, also provide a lot of peace of mind. We've been acquired last year by Galaxy Digital, as I mentioned before, and I think for an institution to work with a vendor that has earning calls and everything is transparent and there are any surprises, the reputational factor is coming into play, and it's helped them a lot to understand that we are here to stay for the long term.
So then last question as we start to run out of time for our panel. We said the R word, regulation, at the beginning, but what is really interesting to me is actually in our conversation, it hasn't arisen. And I think that's actually a good thing because it showed that we were going to, everything we talked about is doing the right thing for the customer, doing the right outcome for the customers, which is great. But last question for you all panel members. If you had an ask, if you had one thing that you could click your fingers and change, be it regulation or be it, whatever out there, laws or anything, or MiCA 2 or whatever, what would it be if you had the ability to change it? Shall we start this time with you, sir?
It's an interesting question. So one of the things that we've seen as private keys technology providers is that there are some regulators that force, for example, crypto exchanges to hold at least 95% of their assets in cold storage, right? So for example, in Japan, this is the case. The problem, and it's not only in Japan, it's also in Israel, by the way, is that they don't define what a cold wallet is. See what I mean? So there are a lot of companies, a lot of vendors that claim to be cold, but actually they use some technologies that connected to the internet at some point with micro USB cable, stand drive, right, QR code and cameras. So once they do that, the cold becomes hot. So it's really missing the point. So if I would be able to do one thing, is to include in all of these regulators where they define a certain amount of assets that should be defined in cold wallet, that the definition will be the impenetrable wallet, the one that never receives input from the internet. That's how you can really ensure that the assets of your clients are really safe and cannot be hacked from cyber attacks.
Brilliant. Stain?
Well, yeah, we didn't mention regulation because it's already so natural that we are regulated, right? It's a prerequisite. And I wouldn't say if I had one wish, I would drop regulation, to be honest. But what I would say is even more clarity on crypto asset topics, right? I mean, MiCA, how long did it take until MiCA came along and we had in Europe that uncertainty, what are we going to do? How many clients did we have that said, look, there is some uncertainty, I still wait until a European regulation came along, right? So they should be, the regulator should be much more agile, and I would wish for a technology neutral regulation that is clear and that is also adaptive to a bit, right? And doesn't move that slow, because it's not only about crypto. We will see so many technology jumps in the future, and it will go faster and faster. And if the regulator takes for every jump 10 years to think about how they're going to regulate it, I mean, it will really be cumbersome, right? So for me, it would be like more clarity. Regulation is fine, we can deal with that. But more clarity and a little bit faster. Get it done. Let's talk. We're here, right? So I think it's a bilateral negotiation, not a negotiation, but at least some brainstorming with the regulators. How can we achieve something?
Brilliant. Thank you. Miko?
So the Utopia one, no more scams,
No
no
more
more
scams.
fraud, to live
Okay.
a more relaxed life.
Yep.
The real life one, we see that a proactive approach from regulator can play a pivotal role in being more effective, faster, and this is a good wish. I believe that now with MiCA we have a huge chance to work closer with regulators. I hope it's gonna happen.
Thank you. And last but not least, Pepe.
I was thinking how many regulation process we are involved in. A lot. So my first approach is, if I can ask for a wish, modify the staff, the people of the supervision and regulation entities. But it's not. Because it's the short term. I agree with you that we, in the future, when regulation is done, what we need is clarity. So, my wish is to modify the thinking of the CEOs of the banks to see that putting an incentive, something in the people of the business development of the banks, of the financial institutions, that this year you have to have a product of crypto running in production. This should be happening today, but it's not happening. This slow speed of the financial entities is because the culture of the financial entity doesn't have any incentives for having crypto today.
Cool. Well, thank you very much. We are out of time. I've got two more things to do. One is to thank my brilliant panel members for their contributions today. Secondly, it's to apologize to all the women in the audience. This is an all-male panel. I did point that out to the organizers a month ago. It took too long to change. I apologize to all the women in the audience. Any of you could have been here today. Any of you could have taken my place. I hope that this isn't what we see next year, and I hope that we have the organizers next time thinking about that in the future as well. Thank you, everybody, and good evening.